So let's start off with the first topic, which is the higher time frame. Now all the heavy lifting comes down to two factors: stacking probabilities and good risk management. Why? Because nothing is 100%. So the goal is to keep it simple and don't overcomplicate it. Analysis paralysis is a real thing. Higher time frame bias is the foundation to profitability. So everything falls into place once you are aligned with the higher time frame institutional order flow. And a very old saying in the trading world goes, the trend is your friend, and that is very, very true. Right, so we're going to be talking about higher time frame, and we start off with monthly to weekly to daily. So when we start off on the monthly chart, if the monthly chart is clear, then the weekly and the daily chart will be clear as well. If the monthly chart is not clear, then we drop down to the weekly chart, and if the weekly chart is clear, then the daily chart will be clear as well. Now, if the weekly chart is not clear, then we drop down to the daily chart to see if it's clear. If the daily chart is not clear, then we simply just stay out until the daily chart is clear. Now, what are we going to be focusing on? We're going to focus on 4 topics here. We're going to be talking about premium and discount, which is the dealing range you're working with. Then we're going to be talking about external and internal range liquidity. And you can check YouTube if you have not seen the video. It's on the MMXM Traders YouTube. Then thirdly, we'll be talking about higher time frame SMT. And fourth, we're going to be talking about the change in the state of delivery and or a market structure shift. So this is our higher time frame protocol, right? For a bullish scenario, we want to have a bullish draw on liquidity. Then always mark out your premium and discount of the range, right? We want to be in discount of that range. Then look for a internal range liquidity pool for our draw to go higher into a external range liquidity pool. Inside that internal range, in discount, we need to see SMT form. This is very important. Now, on that swing low, right in that discount level, we want to see it wick below and then the body close inside of that previous candle. And for a bearish scenario, we want to have a bearish draw on liquidity. We want to be selling in premium, so always mark out your premium and discount of the range. Then we want to hit that internal range liquidity pool to target that external range liquidity pool. And inside that internal range premium level, we want to see SMT form. Now, also with that swing high formed, we want to see that candle wick above that previous candle and then close inside of that previous candle's range. Now over here we've got a crude depiction of a chart. We've got the line chart over here. What is important? Like firstly we talk about the premium and discount of the range. We've got a higher time frame old high or fair value gap here and a higher time frame old low or fair value gap there. Now we wait for price to come back into discount if we want to be a buyer. And what is going to be key is the SMT that forms within that internal or external range liquidity. It can be formed either on this low or on this low, but it is key that there is SMT formed on that higher time frame key level for the change in the state of delivery and that market structure shift. If there is no SMT, there is no opportunity. Same thing over here. We've got a bearish schematic, right? A higher time frame old high or a fair value gap, which is either internal or external range liquidity. So if price hits that, we want to see that SMT form within that key level. It's either on this high or after we go into sell side of the curve. And the SMT that forms after we hit that higher time frame key level is key for that market structure shift, and that makes it way more high probable. Right, so we got a GBP USD monthly chart. So we start off with the monthly on the higher time frame, right? From monthly to weekly to daily. So let's see what is happening over here. First of all, what are we going to do? We're going to mark out our premium and discount, right? That's important. We want to know, are we in a premium for sells or are we in a discount for buys? What is happening over here? We have to look for external or internal range liquidity. We've got that fair value gap. So we're in a higher time frame key level, right? Now, in this internal range liquidity pool, we want to see a rate on external. We've got a swing high over here, and then we can actually see this monthly candle rates this external range liquidity. Now, after external range liquidity, what are we going to be looking for? got a little eye over here. That is internal range liquidity, right? So if we map out that fair value gap, that is going to be the draw on liquidity after we take out that external range liquidity. We started on the monthly, now we're going to drop down into the weekly chart. So what is happening over here, right? We've got that monthly external range rate over here. We've got that draw on liquidity, which is the monthly fair value gap. Now what are we going to be waiting for? SMT, right? The SMT will be key to see when that change in the state of delivery happens or that market structure shift. You can see over here, we've got this bullish candle rating an old high, and then this is important, the bodies of the bearish candles need to close below that up close candle which rated that external range liquidity. Now this is a high probability order block. Why? Because we took out external range liquidity, right? So we soup the high, and the SMT confirms that this will be high probability. We've got a weekly fair value gap over here, right? So we have a POI once we trade below this bullish candle, so the change in the state of delivery has happened. Now we want to find an entry point, right? Where are we going to be looking for sells that will be in an imbalance which has been created after we closed below that change in the state of delivery candle. So now we have our monthly, we know what our weekly looks like. Then we dive into the daily time frame. Where are we going to be looking for those opportunities? Again, change in the state of delivery, right? We run an old high, the SMT confirms it to be high probability. Then we see a break in market structure down here. And again, go back to that weekly chart, right? The weekly fair value gap, remember. So how do we map that out? We know the change in the state of delivery happened on the weekly, which is this move down over here. We left that weekly fair value gap, that internal range liquidity pool. Now, where are we going to be focusing on for our trades? We want to see if we can get in this internal range liquidity, which is all